Hello everyone, my name is Nitin Nahar. In this video, we are going to discuss the amendments which have been brought in for May 22 Inter-CA exams. Now, very few amendments from November 21 to May 22. Let's discuss these amendments from the statutory update released by ICAI. Now, come to page number 2. The first amendment is in relation to exemption chapter. See, there was an exemption where any training program where 100% of the amount is paid by central government, state government or union territory administration was exempt. But in certain programs, government contributes more than 75%. The question was whether exemption would be available for that. Now the government has widened the scope of this amendment, and this exemption entry now has 75% or more contribution by central government, state government or union territory, then exemption will be available. So earlier the exemption was applicable in case where 100% of the training program cost was paid by central government, state government, union territory. Now the exemption says if 75% or more of cost is borne by central government, state government, union territory, then such program will enjoy an exemption to the extent you are providing it to government. Let's see the entry. Services provided to central government, state government or union territory. So you are providing services to central government, state government or union territory under any training program for which 75% or more of the total expenditure is borne by government. If 75% or more expenditure is borne by government, then it will enjoy an exemption. Clear? Okay, and only to the extent of amount which is being paid by government. Then, yes, a new entry has been added, that is national permit. This is relating to goods transport agencies. Say suppose any truck has to take a national permit for flying from one place to another. If it wants to go from one state to another, it has to have a national permit. You would have seen this in vehicles. So that national permit which is taken by a goods carriage vehicle to operate throughout India, that national permit is given by government. Now that national permit will enjoy an exemption. Clear with this? Okay. Now there has been an amendment in exemption where an exemption has been removed. Let me show you that. See, there was an exemption relating to IRFC, Indian Railways Finance Corporation, leasing of assets to Indian Railways. This was exempted. People, whenever something is exempted, there is a consequence of that. What's the consequence? ITC is not available to IRFC. Because their output is exempt, they will not get ITC on their purchases. Correct? What is the amendment? Government has removed this exemption. What's the impact of that? Removal of an exemption would mean that now this is taxable transaction. That means IRFC will start getting ITC on its purchases because now the output is taxable. Are you clear with the logic relating to removal of this exemption? So at present, when IRFC, Indian Railways Finance Corporation, is billing to Indian Railways, it will charge GST and they will be eligible for ITC as well. Let's have a look. Withdrawal of existing exemption. Service of leasing of assets by Indian Railways Finance Corporation to Indian Railways. And all these exemptions which you saw, parallel exemptions have been extended in IGST Act as well. Great. Now, just to add on something here, you can write that in entire exemption, wherever section 12AA was used, it is replaced by section 12AA slash 12AB of Income Tax Act 1961. This is because of a change in Income Tax Act. There are two sections for charitable trusts. That's the reason even in the entire exemption chapter, wherever section 12AA was used, it is replaced by 12AA slash 12AB of Income Tax Act. So for example, there was an exemption relating to old age home, 25,000 per month. There it was written if it is given by a charitable trust registered under section 12AA. Now it will read as charitable trust section 12AA slash 12AB. There was one more exemption relating to charitable activities by a charitable trust. Again, their charitable trust said 12AA, now it is replaced by 12AA slash 12AB. Clear? Then, certain exemptions which are already part of it is satellite launch services by Antrix Corporation Limited has been exempted. New Space India Limited, that enjoys an exemption. Then you have an exemption for Asian Women Asia Football Cup, that also is exempt. Any entry fee related to that or any service in relation to that tournament. Plus FIFA Under 17 Women World Cup, which was scheduled to happen in 2020, but due to COVID it did not happen. Now government has said whenever it is scheduled, exemption will be available. So FIFA Under 17 Women's World Cup and Asia Cup, Women Asia Cup football, both enjoy an exemption at present. Okay. Now if we come to the next one, this is a procedural change. See, the section was already amended. It's just that now an update has been given relating to that. Now, if you see this, extension of timeline for filing application for revocation of cancellation. See, earlier you used to get 30 days time to file a application for revocation. 30 days from the date of receipt of communication regarding cancellation of registration. Now at present you have 30 days plus additional 30 days which can be extended by additional commissioner, joint commissioner, and additional 30 days which can be done by commissioner. So at present you totally have 90 days to file your application for revocation. This has been added in the rules. That's the only change. So 1/1/2021 a proviso was added to section 30 where timelines were extended. Additional commissioner and joint commissioner can extend it by a period not exceeding 30 days and commissioner by a further period not exceeding 30 days. Clear? Okay, so these amendments have been brought in the rules as well. Okay. Then coming to tax invoice, credit note, debit note and e-way bill. See, e-invoicing is not applicable to government department and local authority. Government department and local authority. These two have been added. So earlier e-invoicing was not applicable to SEZ unit, insurer, banking company, GTA, passenger transport service provider, exhibiting, multiplex screen, cinematographic film. Now they have added government department and local authority. So government department and local authority are not required to follow e-invoicing provisions. And when is e-invoicing applicable? If your aggregate turnover in any of the preceding financial years starting from 17-18 exceed 50 crores. So this 50 crores remains as it is. It's just that government department and local authority have a relief at present. Okay. Now, there's a change in Rule 138E. See, earlier, a person who has not filed GST returns, he could not generate e-way bill for his outward supplies, plus for his purchases also, the other person could not generate e-way bill. So, e-way bill, there were two restrictions. If I have not filed GST returns for 2 months or 2 quarters, then I cannot generate e-way bill for my supplies, plus for my purchases, the other person will also not be able to generate it. But now government has slightly modified it. Now the restriction under Rule 138E will apply only for my outward supplies. That means, say suppose I don't file my GST returns. Someone can still raise e-way bill on me, but for my outward supplies, e-way bill cannot be generated. Let's see. E-way bill generation facility to be blocked only in respect of outward movement of goods by the defaulting registered person. So, I will not be able to generate e-way bill if I am the defaulting person. And here 138E has two basic criteria. One, you have not filed GST returns for 2 months or 2 tax periods, or your license has been suspended. In such cases, e-way bill generation will be blocked. Let's see. 138E of CGST rules contains provisions pertaining to blocking of e-way bill facility. Earlier, user was not able to generate e-way bill if the said GSTIN was not eligible for e-way bill generation. So, I could not generate for my sales, neither someone used my GSTIN for its sales. It implies that the GSTINs of such blocked taxpayer could not be used to generate e-way bill as a supplier or as a recipient. Said rule has been amended to relax such restriction. Blocking of GSTIN for e-way bill generation would only be for the defaulting supplier GSTIN and not for the defaulting recipient or transporter GSTIN. Suspended GSTIN cannot generate e-way bill as supplier. However, the suspended GSTIN can get e-way bill generated as a recipient or as a transporter. In other words, e-way bill generation is blocked only for outward movement of goods of a registered person who is not eligible to generate e-way bill. Inward supplies, yes, it can be generated. Let's see the example. A shopkeeper sells pen for 100. After the sale, the pen belongs to the buyer. Shopkeeper does not have any right over the pen. This is a transaction of sale. A is a registered person paying tax under regular scheme and has not filed GSTR1 for 2 months. Mr. B, Haryana, wants to generate e-way bill for goods supplied to A. B is wanting to generate for goods supplied to A. As per the earlier position, B will not be able to generate for A. But now in the amended position, the restriction will not be applicable on Mr. B. B can still generate for A because for A it is purchase. Mr. A wants to generate e-way bill for outward supply to H. E-way bill is blocked as it is outward movement of goods of Mr. A. Clear? Okay. GST returns. See, maximum late fee has been rationalized. Meaning, sir, now there was a maximum late fee for GSTR 1, GSTR 3B. We'll also come to GSTR 4 because the change is relating to these. See, in real life, the late fee applicable is not 100 rupees per day. It is 10 rupees for nil return and 25 rupees for other than nil return, and maximum being 5000 rupees. But in the institute module, 100 rupees is used. So we'll have to stick to that 100 rupees for examination purposes. Now institute has provided that maximum late fee is defined. That is, maximum late fee cannot cross this number. Let's see it carefully. Let's see what are the persons or cases which we are talking about. CGST, SGST. See this carefully. Remember, IGST does not have a late fee. First case is aggregate turnover preceding financial year is more than 5 crores. If your aggregate turnover in preceding financial year was more than 5 crores, then there is no relief. Maximum late fee will be 5000 each. 5000 under CGST, 5000 under SGST. Understood? Now for those who have lower turnover, government has given a relief. Let's see what's the relief. Say suppose your aggregate turnover in preceding financial year was more than 1.5 crore but up to 5 crore. Then here, instead of maximum 5000, government has kept it 2500 each. Understood? If your aggregate turnover in preceding financial year was up to 1.5 crore, then government has said 1000 CGST, 1000 SGST, this is the maximum. Very good. And any person nil return. Any person, this could be more than 5 crore, less than 5 crore, less than 1.5 crore, any person, if he is filing nil return for any month, 250, 250. This is what they have defined. Are you clear with this? Yes? Okay. Now, if you see carefully, these two will be for GSTR 4 as well. That is composition dealer. Sir, why not A and B? People, A and B cannot apply for a composition dealer. See it yourself. Last year turnover, if it is more than 1.5 crore, can I take composition scheme? No. So A and B cannot apply to composition dealer. Only C and D can apply to composition dealer. So only C and D will apply to composition dealer, and rest all obviously for 1 and 3B. Remember, this is only for 1 and 3B and 4. It is not for any annual return, final return. Their late fee remains same as earlier. Yes. So you can make a note of this small table. You can pause the video and make a note of this small table, maximum late fee. You can make a note of this here or in the next to next page somewhere. This particular part. Now, let's see these provisions in the law. Let's see. Maximum late fee in respect of 1, 3B, 4 has been rationalized. See, 7 is not for inter-CA. 7 is for TDS, so it will not apply for inter-CA. Section 47 stipulates the specified amount of late fee. An equal amount of late fee is applicable in SGST Act as well. Late fee can be waived by central government and late fee is regularly waived by them. Now for delayed filing of GSTR 1 and 3B, the total amount of late fee under 47 from June 2021 or the quarter after June 2021 who fails to file 1 or 3B will be as follows. Nil return 250. This is what we discussed. Up to 1.5 crore 1000. More than 1.5 crore up to 5 crore 2500. And other than this 5000 each. Let's see for GSTR 4. The total amount of late fee for GSTR 4. If it is nil, then 250. If it is other than nil, then 1000. Clear? Okay. And the last change is relating to GSTR 9C. Earlier GSTR 9C was to be certified by a chartered accountant or a cost and management accountant. 9C was a reconciliation statement which was to be submitted along with annual return, that is GSTR 9. Now instead of certification by a chartered accountant, now the law says it can be filed self-certified. This is the position. And let me also tell you what is the position regarding filing of 9C for your exams. See, if your turnover is up to 2 crore, GSTR 9 is not required, 9C is also not required. More than 2 crore, up to 5 crore, 9 required, 9C not required. More than 5 crore, both will be required. And obviously this is turnover of that financial year for which we are checking 9C. Now 9C is applicable only when the turnover is more than 5 crore, aggregate turnover. Here earlier it was certified by a chartered accountant or a cost and management accountant. Now it says self-certified. Are you clear with the change? Okay. Let's have a look. Mandatory requirement for submitting reconciliation statement audited by specified professional done away with. That means it has been removed. With effect from 1st August 2021, CGST Act 2017 has been substituted so as to remove the mandatory requirement of furnishing a reconciliation statement certified by specified professionals and for annual return on self-certification basis. Further, Commissioner can exempt any class of taxpayers from annual return as well. This is what they have done. Up to 2 crore, no need to submit annual return. Now, the substituted provision reads like this. Every registered person other than ISD 51, 52, that is TDS, TCS, all this is not there for your interseal. CTP, non-resident taxable person, shall furnish an annual return which will include a self-certified reconciliation statement reconciling the values declared in the return with the audited financial statements for every financial year within such time as may be prescribed. However, Commissioner may exempt any class of registered person from filing annual return. Further, nothing in section 44 shall apply to any department of central government, state government, local authority whose books are subject to audit by CAG or an auditor appointed for auditing the accounts of local authorities. And obviously people, the requirements of section 44 will not apply to any department of government or local authority because their books are already audited by CAG or auditor appointed by local authority. Clear? So this is where we end with the amendments for May 22 exams. All the best.